Indigo Paints is the next corporate on our radar, also reported Q3 numbers, strong EBITDA performance, but the PAT was impacted by the new labour code in Q3. We have Hemant Jalan, CMD of Indigo Paints, now joining in. Mr. Jalan, thank you very much for joining in. When we speak to people in the industry, the sense is that despite, even after GST, the demand environment is still a bit soft. Can you tell us how demand has been for you? What should we expect in Q3, the first half of FY27, and even for next year, because you have capacity addition coming on stream?
See, as far as everyone in the paint sector, whatever we can gather by finding out in the market, October was a bad month for everyone. And the reason is that we had an early Diwali and a late monsoon withdrawal. So October on a year-on-year basis was perhaps negative for the industry. November and December, and in fact going into Q4, even January, at least we have seen double-digit growth in 3 months in a row. Now, unfortunately, the weak October has impacted Q3 numbers because a negative October pulls down your figures for the overall quarter, which is why I think the quarter's number, which we have shown a 3.5% top-line growth on standalone and 4.7% on consolidated, does not quite reflect the bounce back in demand that we are seeing as we speak. Now, if February and March hold out the way the last 3 months have, I think the whole industry should be reporting much, much better numbers in Q4 compared to what you have seen in Q3.
Mr. Jalan, just continuing our conversation. So you're saying November, December, January saw double-digit growth. And as of now, the indications are even in February, we've done half of February, that trend is continuing. So therefore, Q4 looks a lot better than Q3.
Well, as of now, February looks all right. It's hard to say with half the month gone. Most of the sales typically happen in the second half. But if we compare with where we were on 15th of February last year, we seem to be much better off. So hopefully, fingers crossed, February and March will hold out the way the last 3 months have, and we look forward to much better growth numbers as far as top line is concerned in Q4. Bottom line hasn't done badly at all as far as Q3 or even Q2 was concerned for us.
You've lowered your advertising and promotion expense and you've redirected it. What does that mean for your margins? Is that a trend that will continue?
No, I think it is overall margin neutral. There is a slight 1% drop as far as ATL advertising on television and digital is concerned. And that has been substituted by much higher spends when it comes to the spends that we do with our contractor engagements and painter engagements. So we have upped that significantly, and that is a strategic move within the company. As far as the overall year is concerned, I don't think the drop in advertising will be significant because it sometimes depends upon timing of sporting events. Like you have the World Cup T20 going on right now where we are significantly there on the advertising screens. So our Q4 numbers on advertising are likely to be fairly healthy, and we would be there in IPL. So those are events that consume a lot of our advertising. And sometimes these events do get shifted around from one quarter to another. So on a quarterly basis, they seem to have a much larger impact than what is intended as far as the whole year is concerned.
Got it, sir. Final question before we let you go. 3% is your market share. You're increasing capacity and you're growing at a pace that's faster than the industry. Where is that number headed?
I wish I had a crystal ball to gaze into.
You could have an aspiration, sir.
I can tell you that as the demand comes back and we are no longer talking about very low single-digit growths, as the industry moves to at least a higher single-digit growth, we hope to be at 2.5x the industry growth. That's all we can say. I have no means of predicting where the industry would go. We are coming out of almost 2 years of weak demand, and we are just beginning to see the tailwinds in the last 3 months. We are still keeping our fingers crossed that this will hold out in the future. And if it does, then definitely we look forward to, as I said, 2.5x the industry growth going forward.
So in the next 3 years or so, probably you'll be at around 5% market share, mathematically.
I hope so.
Got it. Always a pleasure, sir, speaking to you. Wishing you, your team, all the very best for a brighter 2026 and FY27 as well.
Thank you.